Good morning, good afternoon, good evening to East Central Missouri and the world, and welcome to the James Strong Show podcast, podcast number 272. Thank you for joining us. Thank you for making us a part of your day. I appreciate it. This podcast was recorded on the morning of Saturday, June the 18th, from the James Strong Studio in Western St. Charles County. For the first time in many, many, many weeks, maybe months, I actually have a guest in studio. He's an owner of, he's a financial guy. He owns Planning with Kieran, a financial firm. And welcome to the show, Kieran Gutting.
Well, good morning, James. How are you?
I'm great. Welcome back. It's been a little while since we talked. I wanted to have you on because, well, anybody that has two nickels to rub together, they're thinking, well, okay, I don't have two nickels to rub together anymore. I only have one because of the stock market, because of this and this and that. Yeah. So we're going to talk a little bit about the economy, what's going on. We went from an unprecedented stock market increase to a pandemic dump, turned around in no time. And now we are experiencing something that I guess we're officially in a bear market, right?
Yeah, we are. Yeah.
Couple things. We're going to talk about what this means to the average Joe who's 20, the average Joe who's 40, the average Joe who's 60, okay? And that's going to mean different things to different people. First of all, describe a bear market. What is a bear market, and why is it a big deal that we're in it now?
Sure. The official definition, and I can't remember the exact number, but it's a marked drop in the market, meaning this is not just we had 2 or 3 bad days, we had a bad we've actually ceded ground, and it's going to be an uphill battle to get it back, which traditionally our markets always have, just depending on how much time you have. But that's what it is. It's noticeable also because it's not one thing, meaning like when Boeing had the 737s that crashed, right?
The 737 MAX, yes.
MAX, yeah. Mm-hmm. And they crashed, and that was bad for Boeing, and Boeing stock got beat up. But the market didn't get beat up, right? Or sometimes there might be something happening in one sector, maybe manufacturing's just having a tough go, but technology's still doing well, and healthcare's doing okay. Well, what we've seen is a pullback across the board. There's nobody saying, hey, it went down, but I'm okay because I was so smart. I had all my money in XYZ. No, everybody is taking a beating, and that's a bear market. There's no place to hide. I don't remember the official. Is it 10% or 15%?
20% is what I've always been told.
Yep. We're there.
Yeah. If the market closes at 20%, because they were talking a couple days ago, maybe, about we're in a false bear market because the market had dipped below 20%
and bounced up,
and then bounced up before it closed. So it didn't close at 20%. Yeah. They only had a few days of rally, and then not.
Then not.
So I guess, and I talked to another financial guy, and he said, hey, we're in a bear market. This is not good. He said, well, yeah, but you do know that, and he threw this number out there, so I don't think he made it up. He said, we spend about 38% of our time in a bear market. Did you know that? And I said, I do now. So,
that's right.
So this is nothing new, okay? I think sometimes our memory is not very long, and we're thinking things are good, things are good, and things are good. So what goes up always goes up.
Right. We think that, and it does, but it doesn't. So if you walked back 35, 40 years and you looked at the biggest companies in America, it's a very different list than what it is today. Some of those countries, Sears Roebuck, I hate to break it to everybody, they're not coming back. Right. And Microsoft wasn't much of a power in 1984, so things change. So things do come back, but they often come back a little differently. So what happens is, does the Dow come back? Sure. But Sears isn't on it anymore. You know, Microsoft is.
Mm-hmm. Mm-hmm. So things just change. And what I've always heard from people is, look, the stock market historically has had ups and downs. But if you look at the big picture, it's always the best investment for the average Joe out there.
Yeah, it can be. There's some variables in that. And I would tell you, I have met some people that shouldn't be in the stock market because emotionally it can be hard to open that statement and you lost money. Most of us can deal with it, but some people can't, and if you can't, you need to find other alternatives for you. But what it has done, if you want to look at what's happened in wealth being accumulated in America since the inception of the 401k, which is how most Americans are invested in the stock market, it's been tremendous.
It has.
There's no doubt about it. And people will play devil's advocate and they'll say, yeah, but it's been great for the companies because you had more. But yeah, when capitalism works well, it works well for everybody sitting around the table and who's participated. So my advice to anybody is always, if your company offers a 457, 403B, 401k, that deferred compensation plan where you take out money of your tax out of your check and it goes in, you should do it because over time it will work well.
What would you say to the person who says, well, yeah, but I don't want to do that because I'm just going to throw it in the stock market and lose it all. So I'm not going to participate.
Right. So a lot of people, you'll hear that sometimes they'll say, well, I lost it all. Probably not. Can stocks go to zero? They can. Most of them don't. And when you're invested in a 401k or something, you're invested in funds. Mm-hmm. And you do have a professional fund manager. They are weeding out bad stocks. Can they take a loss? They can take a loss, sure. Mm-hmm. But are parts of that portfolio going down at times, going to zero? Very unlikely. Very unlikely.
Sure.
And if you're in your 20s, 30s, or 40s, you generally have time.
That's the thing that, and I've always been told that. And I think what was true then is still true now. One thing has changed, and this is just me, and many of my dear listeners are in the same boat as me. I'm not in my 20s or 30s or 40s. I'm in my 60s. So when somebody tells me, you know what, be patient. This thing will come back in 8, 10, 12, 15 years. So be patient.
Yeah. Well, there's a couple sides to that. So when your grandfather turned 60 or 62, their life expectancy wasn't that much longer.
True.
When you turn 60 now, it's not unreasonable to say you will turn 85.
Right.
80. If somebody turns 80 and dies, people know they didn't die young, but nobody thinks they were particularly long lived. 90, I think, is that number now. 90, boy, that's a long time. But that means if you have money in the market at 60, you might have some money in the market at 85.
Right.
Now, should you evolve it? Probably not. Should you have a plan for how you're going to take it out? Sure. Are all these things important? Yes, but your life is nowhere near over at 60 or 65 or 67. Now, your health, all that, everybody's different on that. But a record number of people turn in 80.
Well, and what you mentioned is very telling. I read an article one time when Social Security was first introduced. There was no 62, it was 65. You were 65 years old. You couldn't take your money out. You couldn't get your check until you're 65 years old. That snapshot in time when they made that law, the life expectancy in the United States was 64.
That's right.
Okay. So if the life expectancy now is 73, let's just somewhere around there. Let's say it's 73 now. That means you can't retire until you're 74.
That's right.
If they implemented that, there's no problem with Social Security.
That's right.
But if they tell me, look, you can't retire till you're 74,
you've got people in the streets.
You absolutely.
If you said
have
you are
people in
now
the streets.
Social Security eligible at 74, full retirement.
Yeah.
If you take it early at 71, people would go insane.
It would make January 6th look like a cakewalk.
That's right. Yeah, and that's so longevity in retirement is one of the biggest risks. When my dad's dad, my grandfather, my paternal grandfather, was born in St. Louis in 1907. Mm-hmm. I remember when he turned 70. That was a big, big deal.
Yeah.
Because a lot of people didn't turn 70.
That's true.
And he did. And he was dead a year later, But today when people turn 70, they get their friends together, they have a party. It's a notable event, but nobody's sitting there going, oh my gosh, that's a huge deal. 90? Yeah.
Yeah. That's that 90 is the new 70, I guess.
Might be.
But I'm always an optimist. Okay, I'm traditionally a half glass full guy, and I am trying my best. Please believe me on being a glass half full guy. The podcast I did last week was had to do with first world problems, and to sit here and fuss and complain about some of the things that we fuss and complain about, look, it's minutia compared to what's going on in many parts of the world. We have plenty to eat. We have a nice house. It's hot outside. The air conditioning zone, we're comfortable. If we want to go swim in the pool in the backyard, we will do that. I'm currently investing in a car, but I'm restoring a 1951 Jaguar Mark 7 that was my father's. Okay, how do I get there? I get into my Jaguar XE and drive there. And oh my gosh, did you know I just paid $5.29 a gallon for 93 premium gasoline? Yeah. Stop it. Okay, but from an investment standpoint, traditionally, okay, the stock market's down. That's okay, though, because you can buy bonds, because if the market's down, bonds are up.
Right.
And is that the case?
No.
Well, that's okay, but you can go ahead and put money in the bank and with a CD because you'll get good interest rates. Is that the case?
You won't get good interest rates yet.
In other words, there's no safe haven today.
It's tough out there. So if you own bonds, and the way most people in America own bonds is they own a bond fund, a mutual fund full of bonds. And what happens is traditionally, if you bought an individual bond, and they're typically issued in amounts of $1,000, and people might buy one at a time, they might buy 10 or 100 at a time. Mm-hmm. But you pay $1,000 for the bond, you get the interest rate, maybe 4%, and when that bond matures, 5 years, 10 years, 20, 30 years down the road, you get your $1,000 back, and that's great. But in the meantime, if new bonds come out and your bond is being paid 4% and rates go up and new bonds are paying 6%, your bond isn't worth $1,000 anymore. It's worth $850, $900.
Right.
Okay. Now that doesn't matter because when it matures, you're still going to get your $1,000 back, assuming the company's still in business.
Right.
Okay. But when you're in a bond fund, bonds are maturing at different times. Why won't the bond manager just hang on to them and they'll mature? Because you're dealing with individual investors who want to cash out, and that bond manager has to sell them to get the cash to pay the investors. Mm-hmm. So whether the bond manager has belief in the bond isn't going to matter if he has to sell, if she has to get cash to pay the investors. And that's why if you own bond funds, you've seen a drop in value. Partly that, and because the bonds have become valued less because we've had a kick up in interest rates. And it's not just a kick up in interest rates, it's the speed in which they've gone up. It's remarkable. Typically, we say interest rates going up over a 2, 3, 4 year period. But look what's happened in the last 6 months. It's been on a rocket ship up. So the adjustment is hard. One place you can get, if you're looking for a bit of safety and you're looking for a return, you can get what's known as an I bond.
And that's a new, relatively new, comes from our friend Uncle Sam. Mm-hmm. So these are U.S. federal government bonds. They pay a stated amount of interest, but it resets every 6 months. Well, correct. I'm sorry. Go ahead.
So what you have is they're tied to inflation. So right now they're paying 9.62%.
Right. So they don't truly pay interest, but they pay a rate of return based on the rate of inflation. The interest rate is actually very small.
Interest rate's tiny.
But if the inflation rate is high, it's built in.
That's correct. So these have worked. I've had some clients do this. It makes sense for them. They buy them. So the rate got reset a few months ago, was at about 7.5, went to 9.6. Mm-hmm. They are accruing interest. You're not getting the interest cash in your account. It's just accruing.
Because like a savings bond, they have to mature.
And there's a couple sides to it. One, you have to keep it for 12 months. Mm-hmm. So this is not a short 90-day thing. You have to keep it 12 months. If you sell in under 5 years, there's a penalty. But the penalty is you only forfeit 3 months of interest.
Exactly. Not much of a penalty.
Not much of a penalty. And you keep all the other interest you've accrued. The other limit is you can only buy $10,000 worth in a calendar year. So that means you could buy $10,000. Your spouse could buy $10,000. In a little bit over 6 months, we're going to be in a different calendar year. You could do that again. I haven't verified this. I have been told that if you have a trust and or an LLC, the LLC could buy and the trust could buy. Mm-hmm. So you have some options. And again, is it huge money? No, it's safe. It's the U.S. federal government.
Right.
It's considered risk-free.
And when you consider an I-bond to the 30-year Treasury, right now the 30-year Treasury is paying 3.293%.
And all you have to do is keep it there for 30 years.
That's right. I'll be 92 years old. I would never buy one.
Right.
Because to me, if I put $10,000 into a 30-year Treasury, I may as well just flush it down the toilet.
Yeah, for the individual, it loses the plot. There's no point.
Right.
These, the people, those 30-year Treasuries are bought largely by institutions, endowment funds, and some for the uber wealthy. But they're not made for Bob and Sally living on Main Street, USA, to do that. Shorter term one, there's some 2 years out there and whatnot that might make sense. But the I-bonds is one place I've seen people get some return in this type of market.
By the way, these I-bonds aren't new. Do you know who invented the I-bond or who introduced it?
I don't.
Vice President Al Gore.
Wow.
They've been around a long time, but they've never been a big deal. And they were introduced by him they were originally set up as a hedge against inflation for parents to save for college for their children. Because even if you bought a savings bond, which is a decent rate of return, they're not paying much now and they're still eaten up by inflation. It said, look, if we put something in place that would be linked to inflation, so you'd be all but guaranteed if you put away so much money, you're going to have enough money for your kid.
Yeah, and you can see that because they're limited to $10,000. They're not going to let Elon and Bezos go in and park $8 billion and pay them 9%.
That's right.
It's not going to happen. You buy them electronically. You buy them online. I believe it's treasurydirect.gov, I believe is the website. If you go to the Google machine and you put it in, you'll find it.
But they're I-bonds, not savings bonds.
They're not savings bonds. They're different. They are I-bonds.
Mm-hmm. Yeah, it's a good hedge against inflation. And we need that. Inflation rate right now is just, it's through the roof.
It's through the roof. And the federal government, when they calculate inflation, don't calculate fuel and don't calculate food.
Which are the two big things that are going up.
For the consumer, that's where we feel 90% of it. But it's everywhere. I was talking to a guy at an automobile repair shop yesterday, I think, and he said the tank of Freon, because, it's hot here in the Midwest.
Yes.
And, we use it to recharge our systems, repair air conditioning in cars. He said we used to pay $90 for that tank. It's now $300.
Wow. Unbelievable.
That's not... The shop can't eat that cost. The shop can't even hedge out and eat part of it. It's triple.
They've got to raise the price.
They don't have a choice.
Right. And nowadays, the world we live in, again, the first world that we live in, well, you got to have air conditioning, right?
You got to have air conditioning.
That's the way we think.
Yeah, and it's that also. So if you go to, I took my godson out for his high school graduation. I took him to a nice steakhouse. And on the menu, all the steaks are now priced at market price.
Right. They don't publish it.
Because of volatility. And the owner told me that it's not that we're embarrassed that the steak is whatever the price is.
We don't know what we're going to pay for it.
We don't know. And it varies too much. You used to only ever see that for things like lobster tails and whatnot in the Midwest because supply was not like living on the coast.
Right.
And to have market price in the Midwest on beef, that tells you the volatility in it.
The volatility is everywhere. My day job is an industrial sales job, and everything we manufacture is made with steel, tool steels, specialty steels made for specific cases. Used to be once upon a time, the steel prices are good for 30 days. Okay. When things get tough, they're good for a week. Recently, steel prices are good through the end of the business day.
That's amazing.
Very recently. Okay, this is the steel price now. It will be different when you place your order, even if it's later today.
That's incredible.
The price of the steel is whatever it is.
And unheard of. If somebody told you that 5 years ago, you said, well, we'll never get that bad. We get down to a week.
Yeah. Yeah.
Interday. It's amazing.
And the one thing the market does not like, and again, you're the financial guy, not me, so correct me if I'm wrong. The one thing the market does not like is uncertainty.
Correct.
Even if we knew, okay, steel is definitely going to go up 10% this month. Yeah. That's better than saying we have no idea.
And not only do we have no idea, we don't know if it's going to be down 7% or up 14%.
That's correct.
That's the real uncertainty. It's not uncertain that, we think it's going to be up 10, ends up being 9.5, it ends up being 11. That's all fine. It's we really don't know.
And that's the big thing, because you know what you're talking about. And that's why I wanted to have you on the show. There are so many people out there who are running their pie holes, Kieran, who they know nothing about what they're saying. Why are things the way they are? Well, it's because Biden's president.
Right.
Stop it.
Stop. There's always...
Does that have something to do with it? Sure.
Sure. The quick, easy, obvious always seems that way. Most of us we tend to believe, and I think it's because it's a simple belief, to believe that the big effect is one thing. Okay, it's true if that's an earthquake, but for most of it, it's not. So the labor force, right? We've seen fast food restaurants not opening their dining room because they can only get a staff to work the kitchen and the drive-through. They don't have enough extra staff, or they just close at 2:00 and reopen at 5.
Right.
Unheard of. And we're seeing that with a lot of unskilled and lower skilled labor. And everyone's like, well, it's a pandemic. Okay. It's a pandemic. It's that 10,000 boomers a day are retiring. Mm-hmm. It's the fact that while those two things went on, at the same time, we had the rise of the gig employer, be it driving Uber, driving Lyft, driving Instacart, and that if you're working a lower skilled job like maybe a fast food job, the chance of you having a disagreeable boss or an irregular schedule, and you might be trying to balance this as a single parent or as a working parent, it becomes unreasonable. And when you could instead take your car, drive for Instacart, and you know what? If your kid's sick on Tuesday, you're just not driving, and you don't have to explain that to anybody. Or if you've got a doctor's appointment for your kid at 9 a.m. and you can't really start till 11, you don't have to explain that to anybody or get on paid.
People do what works for them.
They make it work. So we've got the gig worker rising. We've got boomers retiring. We had a pandemic, and you have also a generation of people who grew up wealthier than ever before, which we've been on this track for a while, but they view work differently. They think about it differently. And maybe for the first time, maybe not, the money, I'm a Gen Xer, and it was always about putting in FaceTime, being there. And if you got the opportunity to make a couple dollars extra,
right,
you take it. Well, I have a brother-in-law who works for Boeing, and several years ago, they sent him out to Australia, and there's an issue with the F-18. Mm-hmm. Well, as Frank said, he said, when you go to St. Louis or anywhere in the U.S. and you say, hey, anybody interested in overtime working on the F-18, the guys about throw their shoulders out, raising their hand up.
Right.
He said, we went to Australia, and we're like, okay, well, what about overtime? And they're like, the rugby's on, and, I got this, I got a barbecue, and they weren't interested. And now we're seeing some of that with some of our younger generation.
We absolutely are.
It's
and it's not necessarily a bad thing.
It's not necessarily.
It's just a thing.
It's a different thing. It's a different thing. Mm-hmm. And again, there's 100 reasons in that. If when you started your life with your wife, if you wanted to buy a lot of stuff, you had to buy it used you had to buy it new, because used meant it was about used up.
Right. It's exactly right.
And now, if you want to go to an estate sale and you want to buy pots, pans, and everything, you can do it for $40. You'll walk out with it.
And pots and pans don't necessarily wear out.
They're not worn out. You're going to get a few years out of them.
Yeah.
It's going to be okay. It used to be when my grandmother got rid of something, and I'm sure the same in your family, it was done.
Yeah.
It was done.
It's so telling, because, again, what we expect nowadays is different from what we expected before. If your air conditioner breaks, you have to buy air conditioning. I grew up without air conditioning.
I did also.
Yeah. And we survived, but people don't do that anymore. When I worked in the machine shop, everybody always worked overtime because, and I even told my boss this, he laughed and I didn't. But I said, yeah, of course I'll work overtime because unless you pay me time and a half, you're not paying me what I'm worth. That's the way people thought. Free time is more important nowadays.
And part of it, I believe, is tied into the base standard of living.
Yes.
For many Americans is much higher than it was 40, 50, 60 years ago.
Oh, it is. What's expected? Like, for instance, everybody has a cell phone. Everybody has air conditioning. Most everybody has a car.
Yeah. And can you buy a new car without power windows? I don't know. Maybe you can, but I don't know that you can.
Don't think so. All cars have power windows. Okay.
And the lowest quality car now, if you bought it brand new, what are your chances of getting 100,000 plus miles on it? Outstanding.
That's true.
You'd have to abuse it to not get 100,000.
That's very true because they're built so much better than they used to be built. Things are just different now.
Things are different. So I think all that, now you've got a labor issue because you've got all these things happening at one time. It's not just that one thing. And maybe the pandemic accelerated some of it, but it was happening anyway.
Mm-hmm. And the pandemic did have a lot to do with it. There's nobody alive now to speak of who has ever lived through a pandemic.
Correct.
And it's a real thing. It wasn't made up. Dr. Fauci did not make this up. The Trilateral Commission did not invent this. Okay, it was a real thing. The war in the Ukraine is a real thing.
It's a real thing.
Okay, and we don't know what's going to happen. I mean, if next week Russia decides to invade Poland, that's a big deal. If next week Russia has a coup d'etat, they throw Putin out of office, they apologize, they pull out of the Ukraine, they said, look, we're going to pay for much of what we screwed up. And by the way, we want to pump and sell a whole bunch of oil. Things are going to change.
Things will change.
And we don't, and unless you're a remote viewer who has been on the Art Bell Show, you don't know what tomorrow's going to bring.
That's correct. That is absolutely correct. Yes.
And Major Ed Dames, even his record is not very good, but that's another story for another day. So we don't know what's going on. There is no safe haven. The market volatility, the interest rates, gasoline prices affect absolutely everything.
You know, I was at the station this morning pumping gas, and the guy next to me, and I said, you know, they run better at $5 a gallon, don't they? I said, it's kind of like buying the beer at the ballpark for $12 or $14. If it's not tasting better, you're just paying too much.
Yeah, exactly.
And again, the gas prices. Why do we have the high gas prices? Because Putin invaded Ukraine. Okay.
That's some of it.
Because Biden's president.
That's some of it.
Because it's summertime and it goes up. Yeah, that's some of it. So again, it's a lot of factors. But the reality is, here in St. Louis area, we are paying just under $5 a gallon. I think about $4.89 seems to be the price. $4.79, $4.89 for 87 octane. My belief is that's going to go up by $1 between now and Labor Day.
Based on what?
Well, prices usually go up over summer on the gasoline, and
because prices be damned, everyone's going to go on vacation.
I think another
first world problem.
Another first world problem. My family, we're going on vacation. My wife and I have 4 children. So the idea of buying 6 plane tickets and then renting a minivan.
That's insane.
Right? So we're going to drive. So we're going to rent probably a big SUV, okay, which is not going to be cheap, and the gas won't be cheap, and we're going to do it. Am I wealthy? I'm not wealthy. Am I worried about how to pay the electric bill next month? No, but I'm not wealthy, and I'm going to do it. Why? We've had a pandemic. We haven't had and we're going to go do it.
And that's the way most people think. Most people in the first world. That's just the way we think.
Yeah. And so I end up spending more money on this vacation. But if I didn't spend it, nothing changes in my life. And if I do spend it, my 3 teenagers and my 9-year-old have a vacation they'll remember for the rest of their life.
That's exactly right.
And if it costs me an extra $1,500, $2,000, that's what it costs me.
Correct.
It's the price I have to pay.
Now, there may be those listening to this podcast thinking, okay, Here's all the fat cat high rollers on the Strong Show talking about all the stuff that they have. But again, if you live in a first world country and if you're honest with yourself, we're all kind of in that boat, aren't we?
We are. And most people, if you live in North America, if you live in Canada or the US, okay, and I know you've got listeners from different places on the globe, but most of us are here. You probably will make enough money. Yeah. Now, if you have zero job skills and you're committed to never getting more job skills and just stocking shelves at Dollar Tree the rest of your life, you might not make enough money, but most people will. And then it comes down to that power of the individual and what you're going to do with that money. Mm-hmm. You know, and everybody likes to spend. It is fun to spend money.
Oh, heck yeah. It is.
We all love it.
You mean more fun than earning it?
Absolutely. More fun than earning it and way more fun than saving it or investing it. Yeah. It just is. It's great. It's that juice out of the orange. It's that sweetness in life. But you have to do it.
Yeah.
You know, you have to do it. When I talk to people like, hey, my kids are just starting out. What do I tell them? I don't make, what do I do? Number one, the most important, in my opinion, the most important first asset class you accumulate is cash. If you don't have cash, you don't have nothing. So if you literally have nothing in the bank, get $1,000. You get $1,000, get $2,500. You get $500, get $2,500, get $5,000. Get yourself something to where it's not panic mode because the check engine light came on the car, because the sink won't stop dripping.
Back up a minute. Get a grant. What do you mean?
Get a grant. Get $1,000. I'm sorry.
From whom?
Save. You got to get $1,000. You got to discipline yourself enough to save $1,000.
When you say get a grant, I thought you meant go and apply for something.
No, save $1,000.
Got it.
Work the extra shift. Work the second job. Tell people you'll walk their dog for money. Get a grant. Get $2,500. Get to $5,000. Get to where these little crises in life, like my washing machine died and I don't have you don't have to buy a new one for $2,000. You can buy a new one for $500. Don't have that be a financial crisis to you. Everybody can do that. Everybody. Accumulate cash. Yeah. You have to. You have to have some modicum of it. I'll go broke if all I have is cash. Yeah, probably. But I didn't say put all your money in cash, but you need some.
Put X amount in cash for now for the rainy day fund.
Always. And people underestimate that when they start out. You know, again, I was talking to my godson, and he's 18. He just graduated high school, you know, all that vim and vinegar of a young man, and he's going to college, and it's good. He probably should. And he said, well, if I got $1,000, you know, I could put like 800 or 900 into the stock market. I said, okay. I said, Nicholas, let's walk through that. And he had just bought brakes on his car, and he's a good kid. He paid for him. He didn't ask mom to pay for him. He paid for him. It cost him $500. Okay. I said, so you got $1,000 in the bank. We put 900 of that in the market. Okay. 3 weeks later, you find out the car needs brakes and it's $500.
Yeah.
Now you have to sell your stocks because Murphy's Law was right. Your $900 worth of stocks are worth $750.
Yeah.
So you're going to go without brakes or you're going to lose money. You're going to lose. You don't have enough to put in.
Right.
So accumulate the cash. So if you're sitting here thinking this is just a high roller show for the James Strong Show audience, that's what you need to tell people. You need to look at your liabilities. You need to do that. But yeah, it's economic sense and financial security in the Western world, in the developed countries of the world, is possible for pretty much everybody.
Yeah.
But it's not going to come to you. You have to have discipline and do it.
Yeah, for that 4% of the James Strong Show who listens from India, believe it or not, we're pretty big in India.
Yeah.
About 4%. Most of them via the GeoSavan app. But in India, it's tougher. It definitely is.
It's tougher, but I've been to India. They have banks. You can accumulate rupees. You can accumulate a lakh. They know what that means. You can. It's not impossible. Keep doing it.
It's tougher. The vehicle is different, but it's certainly possible.
Yeah, and what we're really trying to do, we're not trying to surpass Elon Musk.
No.
Okay? We're not. What most of us are trying to do is obtain financial security. So we're not worried about the electric bill is going to come next month. We're probably going to want to eat tomorrow. How are we going to fund and pay for any of that? And that's what's possible for most of us.
Well, and I'm glad you defined that, because to a lot of people, financial security means I can be a high roller Rockefeller and buy whatever I want.
Right.
No. That's not what it means.
Correct.
If you're in the first world and your air conditioner breaks, congratulations, you have an air conditioner, and you can now write the check to fix that air conditioner.
That's absolutely correct.
Yeah. If the car breaks, you can pay to have the car fixed. If you just got to take a vacation, you can take a vacation. It may not be to the French Riviera, but it might be to the Ozarks. Okay.
It might be to a really nice lake.
Yeah.
You can go to a restaurant, you could go out on a boat or a canoe, and you can enjoy your life.
That's correct. That restaurant does not have to have a Michelin star.
Does not.
You don't have to go to...
We've all had one of the best burgers of our life, going into some nameless place that didn't look like much and ordered the burger.
True.
And it was fabulous.
Yeah.
Most of us have had that experience.
That's absolutely true.
Or we just have, and that's what's available. The other thing that becomes difficult is this long-term inflation, right? Okay. So what year did you get into the workplace where you were a full-time employee?
1977.
77. Jimmy Carter's president, right? We just had the Olympics. Life's rolling on. And if I had said to you, and I don't know your financial situation, but if I said to you, how about by the time you get to about 60, you and the people you know are going to live in a house worth $300,000, maybe even $400,000.
I would have laughed at you.
Right.
Because $400,000 in 1977 was different than $400,000 today.
Right. And if you said today, if one of your kids came to you and said, hey, Dad, I think I'm buying a used car, and you said, oh, okay, how much you're going to spend? And he goes, 10 grand. You're going to go, yeah, okay. Well, if I told you to go out and buy a new car in 1977 for 10 grand, that was astronomical.
Yeah. Yeah.
That probably bought you a brand new Lincoln.
Yeah.
Brand new Cadillac. It would have been hard. And if I had said, go buy a used car for 10 grand, it was almost impossible.
Yeah. They were less than that.
Yeah. They were so, you might have said, I'm starting out in 1977. I need to buy a used car to get to work. And I think I got $500.
Yeah. Well, that was funny you mentioned that, because as I was a young man with a family, that was the price I paid. I probably bought about 6 cars, $500.
$500.
That's what I pay for. That's what you pay for a car, $500.
Right.
And now that fills up the gas tank.
It certainly won't buy new tires for it and fill the gas tank.
It won't.
It won't.
It won't.
It won't. And that's inflation. So when we look at what we're doing along the line, the people that become wealthy, the people, and I probably mean by that people worth 10, 20, 30 million. What we used to perceive Thurston Howell III on Gilligan's Island as, right?
Right.
The millionaire and his wife. We know $1 million doesn't buy that anymore. That I do whatever I want. I only fly at the front of the airplane. And if I'm uber wealthy, I own my own airplane or whatnot. Most people can't get there as a W-2 employee who saves and invests. Most of those people have extenuating circumstances.
What you mentioned is telling, because I was going to bring this up. So maybe you read my mind. Maybe you should be a remote viewer on the Art Bell Show. But you use the term millionaire. Okay. Yeah. If you define millionaire as your net worth is $1 million or more, if you've worked your whole life, if you've participated in a 401k all your life, if the home that you raised your family in, free and clear, is now paid off because you've had it for 40 years, by definition, you're probably a millionaire, aren't you?
You're not far off.
Yeah.
So there's a lot of people.
So a millionaire isn't what it used to be.
Is not what it used to be. Okay. So again, go to 1977. Okay. Go to 1987. And if I said, hey, go out and buy a house for $350,000. You had a very limited amount of houses because there weren't that many that cost that much in this part of the country.
That's correct.
There were some, and they would have been awesome.
Right.
Okay. Now, 350, it's a good neighborhood. It's solid. You're not going to be bragging about it. It's not opulent.
Right.
Right. It's not. So if you were a traditional blue collar worker, maybe you worked for a utility company in the field as a tech, good, solid. You got paid on the 15th and 30th. The check's cleared. You put in the 401k. You got your house paid off. Your house is worth $200,000. You walked out with $350,000 to $600,000 in your 401k. You don't have $1 million, but you're close enough. I mean, you have far more than you thought you would have. And do you have financial security? If you play your cards right, probably. Yeah. Right? Are you wealthy? No. If you walked out with $1.2 million in your 401k, and people do, and you have no debt, and you live in a $300,000 house
that's paid for.
Are you a millionaire? Congratulations, you are. So does that mean you're a jet setter and you fly off to Paris
Not
on a
at all.
Tuesday because you feel like it, and then you only stay at the Ritz-Carlton when you go someplace and we eat nothing but No, you are not living like Mick Jagger. You're nowhere close to it. You have security.
You're fixing the air conditioner when it breaks.
You are fixing the air conditioner when it breaks. That's correct.
I like to say, look at how things were when you start. If you're my age, okay, look at how the way things were when you started working. Now look at the way things are today. Throw a zero behind it.
Yeah.
And I just did the quick math while we were talking. My first machine shop job, I earned $5,200 a year.
$100 a week.
Yeah. $5,200 a year is what I earned. Okay. Machine shop job now pays about $52,000 a year.
There you go.
Add a zero.
There you go.
Add a car.
A car. When I stepped out, I was born in 1969. When I stepped into the world in 1990, and I actually worked in the car business for a while, $20,000 car was still, that
was a big deal.
That was a big $20,000.
Mm-hmm.
Now, if your budget's $20,000 for a used one, you'll get a good car, but you won't have a selection of everything.
Well, first car I bought was my 1979 Chevrolet Monte Carlo. Paid $5,700 for it. $57,000 for a new car. An SUV especially. That's what they cost.
1979, my dad bought a brand new Chevy Suburban.
Okay.
Middle of the line trim.
Mm-hmm.
Okay. 2-wheel drive. It was a Scottsdale trim that was the middle of the line. It was $8,000.
Yep.
He about died.
Yeah.
7 years later, he bought another one, and it was 15 and some change. And it was essentially the same thing, 7 years newer. That was 86. Now to go buy a middle of the line Suburban,
$80,000.
70 easily, right?
Yeah. Mm-hmm. Yep. That's what they cost.
That's what they cost.
But people earn differently as well.
People earn differently. People forget that. They find that old newspaper clipping in grandma's closet. Oh my gosh, pork chops, 78 cents a pound, and loaf of bread. Yeah, but Dad was making $68 a week.
Yeah.
Yeah.
And it's funny you throw that figure out because I still remember this. I, like you, grew up, were blessed with just wonderful parents who raised us perfectly. I remember as a boy seeing my father's paycheck with Mom, who had 6 kids with Dad, so she didn't work outside the home. She had enough with just us. Okay, there's Mom, Dad, 6 kids. Dad came home on Friday with his paycheck, gave it to Mom. She cashed at the bank, shopped at IGA for the bargains, then went down into Pagedale, shopped at Ontario for the super bargains, came home, brought TV dinners, and we had a good meal.
That's right.
Friday night was a big deal.
Yep.
I saw that paycheck one time. It was $68. And I thought to myself, how in God's name do they feed 8 people on $68?
Right.
I thought, oh my God, how do they do this?
Right.
But they did.
Right. And this is inflation, right? You and your coworker now go to lunch. And I don't mean at the steakhouse, but I don't mean McDonald's either. You go to the Olive Garden for lunch, right?
Sure.
What'd that cost? $35?
Easy.
And you didn't order anything. I mean, you didn't get the you didn't get the scampi and the glass of wine.
Right.
Yeah. That's inflation. And I think people, because it generally creeps up on us slowly, we don't notice it, right?
Well, and because in the past 10 years it's been next to non-existent.
It's been minimal.
And people don't have long memories either, Kieran. They think about the last few years. Well, I remember when gasoline, it was $1.90 a gallon. Now it's $5.
Yeah.
Okay.
Yeah. Now we have seen what is a little different this time, and everybody always wants to say this time it's different, and most of the time it's not. It's a twist, not a new story. It's another twerk, another twitch in the road. But it's the rapid increase that we've seen in interest rates.
Right.
It's a rapid increase that we saw in gasoline costs. It kind of snuck up to about 3, and then it went on a rocket ship to 4.
Right.
4 plus.
Right.
It just did. Interest rates, I don't know, but I think off the top of my head, probably 6-8 months ago, you could have got a 30-year mortgage around 3.5.
Yeah.
And now you're at 6.
Yeah.
And so if you're a $300,000 house buyer, again, pretty kind of middle of the road, that payment went from about $1,200 to $1,800. Ouch.
Yeah.
$600 extra a year, $7,200 extra a year out of pocket just because, and it went up so quickly.
Well, and here's why, again, I am trying my best, and please help me to get there, to be a glass half full guy. But on my when I'm in the office, when I'm at the shop, and I'm not traveling, I take a walk at lunchtime, hour-long walk. That's my psychological recharge time. That's my everything. I need that. And I'm walking past another farm that's been bulldozed, and they're putting a massive housing development in there. My God, I don't know how that guy's not going to go bankrupt.
Yeah. Well, it could be tough. It's going to depend on how he has his, how his money's fixed. What he's hoping is that he locked in at a low rate, back in December.
Well,
but if it's an adjustable going up, his overhead just went up unbelievably so.
Well, I mean, and most of the houses, you see these signs that just, it's the old man in me that my jaw drops when I see it. First of all, the subdivision will be named with something with an E at the end to make it sound fancy. Okay.
Yes.
It'll be the something at Lake St. Louis Parky or something like that. Okay. So you got to make it special, because who would pay that much money for a development called, the Doorknob?
That's right.
But, it'll be homes from the 590s. And I'm thinking, well, first of all, from the 590s means if you want doors and windows, it's going to be more than that.
Going to be 650,
yeah,
680.
Exactly. And at 6% with 10% down, you're looking at, I don't know, a $2,000 payment. Quick math.
Easy.
It's a lot of dough, man. Yeah. I don't know, especially when you don't know what's going to happen.
You're going to be more
tomorrow.
than that. If you're financing $600,000 at 6%, you're probably in the low threes.
Okay.
Okay. In the low three, you're probably paying $3,200 a month or something.
There you go.
That's $42,000 a year.
Yeah.
Flowing out, So that, yeah, it's amazing how that happens. And inflation's always been with us, especially, I think, since it's interesting. I really think a lot of it, and I'm not an economist, I'm not a historian in that, but if you look when Nixon took us off the gold standard, in the prices of a lot of things. But again, it wasn't just that. What happened with women getting in the workforce in the 70s, 80s, and by the time the 90s, right? So incomes changes. A lot of things changed, and that change will be constant.
And the labor market will continue to change. Anymore. You told the story of your daughter. Can we tell that story?
Yeah, sure. Yeah. Sure.
I mean, she's a 17-year-old girl who is she going to be a secretary? No. Yeah. Is she going to be an accountant? No. What is she going to be?
She is studying welding at a tech school. She went to this last year. She's just finished her junior year in high school. And in the morning, she would go to tech school, study welding, come back to high school and take her English and math and requirements. And she, in her grade point's a 3.9. Okay.
It's not like she's doing that because she's a flunky.
No, she likes it.
Yeah.
So she wanted to work this summer. She didn't want to work 5 days a week. She's 17. She wants to have fun, as you should.
Yes.
Right?
Yes.
And because we're first worlders and you can. So she found a metal fabrication shop about a mile from our house. She got an introduction there. She told him she's going to tech school, studying welding. The guy said, how about you work 3 days a week and I start you at $18 an hour?
A dopey high school kid who doesn't know anything.
I told her, I said, you're overpaid. But he obviously didn't think so. And then so she's been on the job now a couple of weeks, got the first pay stub, and the guy goes around hanging them out. And there were two people from her technical school and her high school that got hired at this company. Uh-huh. And the guy came up to the two of them and said, I like you. I think you did a great job. Look at your pay stub. You'll see I'm not paying you 18. I'm paying you 19.
Yeah. And he's paying them 19 because he wants to retain them.
Because he wants to retain. They were over the moon at 18.
Yeah.
They'd have been thrilled with 15. They thought they might get 11 or 12.
Yeah. 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 Your daughter found a way around it. I read an article about air travel. And I read these numbers and I thought, no, this is a misprint. These people don't know what they're talking about. I researched it. It's not a misprint. When the pandemic hit, the airlines took a big time dump because nobody wanted to fly. So what do? You fire the pilots. Okay. A lot of them retired early. A lot of them just were let go. The pandemic turned around. Now they want to hire them all back. Life is good again. They want to hire them all back. They can't find enough pilots.
Yeah.
I believe this person was from United Airlines, said the airline industry will need to hire 14,000 pilots a year for the next 10 years in this country. Yeah. Not worldwide,
right.
In this country. Doing the quick math, that's 140,000 pilots, which, by the way, is a job that doesn't require a college degree, and it pays really well.
Yeah, and
they can't find people to do the job.
And it used to be so many of your pilots, and it's probably still true for a good percentage, were ex-military.
Correct.
The military taught them how to fly, learned how to fly.
Yes.
They got out.
Yes.
I know a guy that did that.
Yes.
But you don't have to do that.
No.
There's a training school out by the airport.
Mm-hmm.
You can go. You could go across the river to park. And you can become a pilot.
Yeah. Yeah, you can.
I've met them.
Yeah.
That's, now the interesting thing about that is he's basing that on what he sees demographics, flights, increase, et cetera.
Mm-hmm.
And what I'm curious to know is, are we factoring in artificial intelligence? And are we going to want a pilot on the plane? I think in my life, we will always have a pilot on the plane.
We will.
I think because there's just that we get too freaked out.
Uh-huh.
Will we have two? I don't know. So it's interesting.
I think we always will, at least in our lifetime. And here's what I base that on. Truck drivers.
Yeah.
There's a big shortage of truck drivers. Not long ago, in fact, it was during the 2020 election where Andrew Wang ran.
Yeah.
And Andrew Wang wanted guaranteed income for everybody.
That's right. Universal basic income.
That's correct. Because, all these truck drivers who make good money right now, none of them are going to be working in a few years because all the trucks will be self-driving. That's not going to happen. And I'll tell you why. Let's say same with airplanes. Let's say they find a car or a truck or an airplane that drives all by itself, okay? Do you think they'll never crash? No, they will sometimes. Maybe less than they do now. Probably less than they do now. But the first one that runs into a car and kills a mother and a 2-year-old child will get a judgment for $8.5 trillion, and then that's it. The party's over.
Yeah.
Because the self-driving car, you'll sue everybody and you'll win.
Yeah, you might end up with something like we have on planes now, which is the automatic pilot, right?
Right.
But they're still the pilot.
That's
and
correct.
Maybe you end up with the automatic trucker, so the AI is controlling the fuel flow and all that.
Right.
But your driver has all the override abilities.
That's correct. You've got to have that, because if you don't, you're not going to make money, because even if you make money hand over fist, somebody's going to sue you, and you're going to pay half of it in lawyer fees, the other half to the plaintiff.
That's right. So you asked about going forward. I still hugely believe in the United States of America. I believe in our economy. I believe in our markets, and I believe we will continue to be a leader in the world. I think our strength has always been our innovation, always, constantly. And as long as we have that, and we have stability. And there's always wild cards. There's always the greatest threat to the investor is the black swan. The biggest example of the black swan would have been 9/11. Right? Nobody on September 10th thought that was going to happen.
Correct.
Pearl Harbor, all this stuff. And we've recovered from all of them.
Yeah.
But is there pain? There's short-term pain. Can there be long-term pain? Yeah, you could lose a whole decade in the market where it's just flat. You don't really get anything. We've had that.
We have.
And if
recently
we've
had that.
Yeah.
2001 to 2013.
Yeah.
Net rate of return on the stock market of 0.04%.
Yeah.
Ouch.
Yeah.
65 to 78, 0.01%.
Yeah.
And that's more than a decade. That's almost a decade and a half.
That's a long time.
Yeah.
Yeah, it is. But because, as you said, people have short-term memories, we've been on a pretty good rocket ship since 13.
Yes, we have.
People forget that. They're like, oh, the Obama, it was this. No. 2013, which is in the beginning of the Obama second term, was one of the best years in the history of stock market. It was a tremendous year, and it's been on a great ride. All parties end.
Yeah.
They all do. I saw a great interview with Bill Clinton. He'd been out of office 5-10 years, about the time they kind of get interesting, because they're farther away from it. And he said, he was talking about early in his career in Arkansas. He said, Hillary and I had to go to all these parties because that's what you have to do.
Right.
They all do it. He said, it took me a while, but I finally realized one day and said to Hillary, the whole thing is about leaving the party. He said, and we need to leave about the time we start to have a really good time. And I found that true oftentimes in investments. And I'm not saying sell, get out, but reevaluating your risk, looking at your risk, understanding it. Yeah. And is it possible that you are now 60, 65, 67 years old and you've got a net worth of $1 million and you feel okay, but not wealthy? And is it possible that you can make enough bad decisions to where you do end up with financial insecurity? It's completely possible. Yeah. And because investments tend to run emotional, and with regular investors, with, us, just everybody, okay, there's just really two emotions, and it's fear and greed. It's why most people can't day trade, because a real day trader buys stock in ABC at $20, ABC company, whatever it is, at $20, and knows at 22, if it goes to 22 today, I'm out. If it goes to 21, it doesn't matter. They're out. Well, it does that in the first 10 minutes. A great day trader sold. Most of us go, well, it's only been 10 minutes.
Yeah.
Let's give it let's give it an hour. Well, you know what it closed at for the day? 1962, right?
Yeah.
Like that's what happened. Yep. And that's because we're emotional, and that's okay. It's how we are. It's how we are.
It's funny you say that, because in 2008, when was the pandemic that hit? I guess that would be
in March of 20.
Yeah. Okay. March.
When the market kind of just dropped off a cliff for a bit.
It did. And I called my guy. I said, look, what do I do? Do we sell now? I mean, look what happened. He said, no. He said, you know what you need to do? Buy. I said, what? Yep. Readjust your portfolio and buy. And we did. And it was fine.
Yeah.
If you had, and I'll use nice round figures, let's say you've done everything right and you had $1 million in your portfolio, you're invested in just S&P 500 stocks. Sure. So you now don't have $1 million anymore. You have 800,000 because we're in a bear market. It's down 20%. What do? Do you sell?
All right. I probably don't sell. I hopefully have had a discussion ahead of time, like, what are my plans? What is the purpose of that money? Now, if that's all my money, well, I'm telling you, you should never have had $1 million there.
Right. Right. If they had talked to you several years ago, that would have never happened.
Right. So it's at 800. Okay. What do I own? Okay. What do I think? Okay. Well, if we own Dewey, Cheatham, and Howe, and it's worth $100 a share, and it really shouldn't be this, we might want to sell it. Okay. But if we own Procter & Gamble and we own Johnson & Johnson and Coca-Cola and McDonald's, is it going to come back? Well, history tells us it will, and it probably will. What I can't tell you is how's it going to come back and when. Right. And nobody really can. When the market dropped like that in the spring of 20, it had what we term a V-shaped recovery, meaning if you look at a chart, it dropped down sharply like a V, and then bounced right back up.
Right.
They don't always work that way. You can get that lost decade to where it just kind of peters, and it's, this is where you're at for a while.
Well, and this is what I tell people, and I would encourage them, anybody, no matter what your age is, maybe to give you a call, to contact you, because being a financial advisor, that's not something that, that you pick up in 6 months. It's something you have to really study. And to me, it's the same as being a doctor. If you're sick and you go to WebMD and treat yourself, okay, if you were stung by a bee, that's just fine.
Sure.
If you've got a sniffles, that's just fine. If you've got poison ivy, that's just fine.
If you got bit by a copperhead.
Yeah, that's not fine. If all indications point to you've got cancer, you need to talk to somebody that knows what they're talking about, like a doctor.
Yeah.
If you really want to retire secure, maybe wealthy, but definitely secure, they need to talk to somebody like you.
I know I'm in the business and I'm supposed to say you're absolutely right, but I absolutely believe that.
Yeah.
You know, my dad was a dentist. Do you know what he never did? His own teeth. He went and saw somebody. Okay.
Yeah.
Like, because you need to. The vast majority of people will benefit from working with somebody. And part of what happens in my business is there's so much information out there, and there's so many people speaking with absolute authority, and they don't really have it, or it's right for this particular situation, but that situation isn't your situation.
That's correct. When you speak in generalities, that's just what it is.
Yeah. And in the investments that work for some people, because of you and how you are in your life, they don't really work for you. You're more risk averse, or you're more risk open, or you have a greater need for income. You have a spouse 15 years younger than you.
Right.
You know, you could be. Yeah. So I have a client who retired from a corporate job with a pension. His wife died before he retired. So he took the pension for his own life, right? He couldn't take it for a joint. He's not married.
Right.
Well, he ended up getting married a couple of years later. Yeah. And she is, I think, about 5 or 6 years younger than him. And his health isn't the best. Well, they've got a major problem because when he dies, that pension goes away.
Right.
Right.
Now, what do they do?
And it wasn't that he made a bad decision. He made the only decision he could make at the time.
Right.
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 Life changed.
Yep.
These things changed, right? So you have to have a plan. Most people, and if you're going to hire a financial advisor, talk to a couple of them. And part of it is going to be a personality thing. Part of it's going to be a competence thing too.
Well, it's not only the specifics of the individual, but it's what they're looking to do as well. If I'm 65 years old in perfect health with a 22-year-old wife and a 2-year-old son, that's going to be different than if I'm 65 years old, never married, and have terminal lung cancer.
That's right.
Okay, big difference.
Right, and here's what happens in that scenario. The first guy actually needs to buy life insurance.
Right.
The second guy wants to and can't.
Exactly.
That's the reality. Like
well,
that.
And you mentioned the whole life insurance thing. That's another thing. When people ask me, well, do you have life insurance? I say no. They said, well, why not? I said, because I don't need it.
Right.
I have nobody that depends on me.
Right.
If I were to kick the bucket, the trophy wife would be fine.
Yeah.
I don't have children.
Yep. But it's a very personal thing for a lot of people.
Right.
So a lot of people want it and have it because a part of what they want is no matter what, they want to make sure there's money there for the kids, the grandkids, the charity they're leaving to, whatever. And so life insurance is one of the most personal things.
It is.
And it deeply is. And some people are like, oh, it's crazy, it's this and this. And other people won't live without it.
Right. It depends on the individual. It depends on the situation. And a lot of that situation is your own personality. I used to work with this old Vietnam vet. His name was Tom, great guy. And he told me this great lesson one time. He said, Kieran, a lot of where you stand on an issue depends where you sit, you know? And very true.
And it just does, you know? Well, why would you want to leave money to your kids? Well, I have a, 38-year-old daughter with Down syndrome, and I need to make sure there's going to be enough money. I don't want it to be a burden to her brother and sister. I've got X, Y, whatever it is, or I just feel good having it, I've seen that with people. I had a client, I've done business with him for years. He had money in the market and he had money in annuities. And he called me one day and said, Kieran, just get me out completely out of the market. I can't take it anymore. I can't sleep at night. Let's just get out and do something else. Fine. Yeah. Because your own situation is so unique. It just is. It's really no different than your medical health. There's certain things we should do when we're, we should get a colonoscopy at a certain age. We should do this. We should do that. But it's going to be different for everybody also. And
getting the colonoscopy at a certain age doesn't mean that, hey, look, I'm doing everything right, but I still get colon cancer and die. It could still happen. You're just doing what you can to make sure that you're rolling the dice as correctly as possible.
Yeah. Right.
Yep.
Right. You're on a plan, and at some point you realize I'm probably going to end up with $1 million. That's great. I am, we're moving to Maui and all this. And then you get there and realize, okay, I got the $1 million and we're staying in our home. We can go to vacation to Maui, but we're not moving to Maui, much less staying and when we go to Maui, we're not renting the presidential suite at the Ritz and staying there for 3 weeks.
Well, and you're right about that, because I always thought, look, when we retire, we're getting out of Dodge, we're doing this and this and that. And now we have 7 grandchildren that live in St. Louis. We're not going anywhere.
Got a lot more complicated all of a
That's
sudden.
exactly right.
That's right. And then you see, I've seen people where they had 3 kids, and one now lives in Florida, one lives in Oregon, and another one in Texas.
Yeah.
And some of them make the decision, I'll just stay in St. Louis because that's the base. Mm-hmm. And some of them will say, you know what, I'm going to Texas because I have a better relationship with that kid.
Yeah.
That's where the grandkids are youngest.
Yep.
Or whatever. That's just what they like. So all that changes. And life, as we know, life is fluid. Life changes. Our beliefs change. What's important to us changes.
So I can be a glass half full guy. I don't have to be. Convince me as quickly as possible.
Yeah.
How do I not say the New York Times says God is dead and the war has begun? Okay. Convince me that that's not true.
Well, I think if you live in the United States, you have a lot of control over your destiny. We hate to admit that, but we really do. We get to choose what we eat. We get to choose this. We get to, we like to think that we're affected by these black swan events, and we are to a point, but they usually don't devastate us. Yes, if you were in the World Trade Center on 9/11, it probably killed you. Okay.
Right.
But it didn't kill everybody. I've met people who got out. Uh-huh. Okay. But why is it not all over? It's like when I've talked to people about crypto, and they're like, yeah, but we have a fiat currency and this and this, and what's it worth? Well, I don't know what it's worth. I don't know, 250 years of paying our damn bills?
Yeah.
How about that?
Yeah.
What's that count for? How about the fact that if I'm in some other part of the planet, okay, and maybe it's dicey, maybe it's a part of Eastern Europe, maybe it's a country, an undeveloped country in South America or this, and I get rousted by the police, right? If I got a couple pictures of Ben Franklin with me that were issued from the bank,
get you out of a lot of trouble.
That's the U.S. dollar.
If you wink at him and say, hey, how about if I email you 0.7 Bitcoin?
Yeah.
You're going to prison, son.
Right. Have I introduced you to my friend who works at the bank, Mr. Franklin?
That's
I've
right.
Got a couple pictures of him.
Yeah.
It's probably, when I went to Cambodia, I'd been in India, and I'd met a guy there, became friends with him, and he had traveled through Cambodia. And I wanted to go to Cambodia to go to the Angkor Wat's temples, because my dad had been there in the late 50s. And he said to me, do you have any $100 bills? And I said, yeah. He goes, make sure you keep 2 or 3 of them with you when you get there, because the Khmer Rouge was almost dead at that time. This was Pol Pot's army of gangsters.
Right.
He said, but you can still get rousted. He said, I got rousted by the police. He said, I had a picture of Ben Franklin with me, got me out of it. That's the U.S. dollar. That's why we're optimistic. We're still big. We're still strong. China, Japan, Japan in the 80s was going to take us over.
Right.
They owned Rockefeller Center. The biggest company in the world was a Japanese bank. It's not in the top 50 anymore.
Yeah. Yeah.
Is Japan in poverty? No, they're not. But they're not the United States of America.
And we are certainly flawed in this country. We're flawed
deeply,
big time in this country. But throughout history, there's always been someone in charge. Today, it's us. If it's not us today, and you think things are bad now, what do you think it's going to be like if China or Russia are in charge?
Yeah.
Do you think it'll be better?
You'd be a madman.
Yeah.
You would be certifiable if you did.
Nobody thinks it would be better.
Nobody thinks so.
That would include Russians and Chinese.
That's correct. That is absolutely correct. Yeah. So I think that's a reason to be optimistic. And two rules I've learned in life, and it's true in investing, it's true in life. One is from the philosopher Spinoza. And Spinoza said, no matter how thin you slice it, always 2 sides. And there is. And the other one comes from the great British scientist, Sir Isaac Newton. For every action, there's an equal and opposite reaction. Right? Mm-hmm. So we know that. We know that what we do, what we don't do. Yeah, but if we do this, that. Yeah, but if I buy Coca-Cola, I could lose money. Yeah, but you could collect 3.5% a year in dividends, and it could go up 3% a year. You made 7%. But yeah, it could drop. It could this. There's always 2 sides, and something's going to happen if you do something. So making a plan, having ideas, I think is crucial for financial security, and with the understanding that there's probably going to be some stuff that you didn't see. People who were healthy get sick. People who are healthy die. This changes, that changes, always, you know.
People listen to this podcast. They like what they're hearing. They agree, okay, I need to get a guy. And
Yeah.
Kieran sounds like that guy. How do they get a hold of you?
You know what? Just call my cell phone. James Strong Show, call my cell phone. 314-283-5055. Go to my website, Planning with Kieran, and Kieran is Kieran, planningwithkieran.com. Take a look. There's a couple nice testimonials on there, but call my cell phone. Send me, there's an email link through there, but my cell phone's easy. You can call me, you can text me, tell me you heard me on the James Strong Show, 314-283-5055.
And what are the criteria for becoming one of your clients, for you helping?
They need to have an interest.
Yeah.
You know, you mean you'll take somebody with $20? No, but I'll give you 15 minutes. I'll talk to you. If you're a young person trying to get started, if you're a 55-year-old who got divorced or realized I don't have as much as I need, what do I need to do? Part of myself in my life is giving service to other people. And sometimes I make money doing that, and sometimes I'm giving service to people. It's how I was raised. I will talk to you.
Dear listeners, please listen to what he just said. And the reason I say that is because I was very fortunate. One of the top 10 things in my life, maybe the top 3 things in my life that ever happened, is when I was a young 19-year-old just starting out, I had somebody who took an interest in me. And he sat me down and says, look, son, here's what you need to do. Start saving now. And at age 19, I did. I listened to him. He didn't charge me anything for it either, but I listened to him. And because of that, I'm okay.
Yeah.
If you're 19, if you're 29, if you're 49, you can help. You can help them out.
If you just turned 55 and you're like, I really don't have much saved for retirement. I know I need to work another 10 years, maybe 15.
Mm-hmm.
It's too late for me. You're wrong. Something is a whole lot more than zero.
Mm-hmm.
A whole lot more than zero. It's not too late. We can't change the past. The past is the past. Life happened as it happened, you know? Move forward.
Very good. Kieran Gutting, planningwithkieran.com is the website. Give him a call. I mean, if nothing else, have a 10-minute conversation with the dude. He knows what he's talking about. I guarantee he can help you out. If nothing else, he'll give you good advice. Kieran, thank you so much for being on the show.
James, thanks a million.
Hey, my pleasure. That's it. We're done. JamesStrongShow@hotmail.com. That's my email address. I will not help you with financial advice because I don't know what I'm talking about. I pay people to do that, but I can give you some halfway entertaining podcasts on occasion. Send me your email address. I will send you a link to the podcast upon publication. You can download it and listen to it at your leisure, or just go anywhere you get podcasts, and my dopey show is there. That's it. We're done. Until next time, this is James Strong saying adios.